Hello, Roy.
Hey, Janet.
No goodies today.
I'm here at MVCA.
Oh, you are.
I had some appointments in Carlton Place anyway, so I
Oh,
I could use the office here instead of driving all the way back.
ah. Here I thought you'd be saving yourself a drive.
No, because it's when I come out here that I try to do as many things as possible. So
That's what I do when I drive into Canada, which is really only 20 minutes, but still, I'm always trying to not like go in and out and in and out. I'm always combining trips.
yeah,
It's what good planners do, right?
Exactly. Trying to minimize the gasoline and emissions and and just time spent in the car, although I do listen to podcasts, so there is some value there.
when you live as far away as I do, it's an hour and 15 minutes to Perth alone. So you
Oh, wow.
Oh,
try to
wow.
get you try to get as much done as possible.
Right.
Yes. Wow. Yeah. Hmm.
Stacy, before we get started, I meant to send an email on this yesterday, and then it just slipped my mind, and I was looking at stuff this morning. So if you go to the financial statements and you go to page 16 of the financial statement, which I
Yeah.
think is 33 in the package. And if you go to the very bottom, this is the skit that number 8, note 8 on the tangible assets.
Yes.
Okay, so the net book value of tangible assets at the bottom for 2022 is 7,482,111, right?
Yep.
And if you go to the next page, sure enough, 7,482,111 shows up as tangible capital assets for 2022. But when I look at the tangible assets for 2023 on page 16, it says 7,893, 010. But when I then go to the next page, I get it's 7,845,181.
Oh. Sorry, I have mine broken up, so I'm just going through.
Yeah, and maybe I'm missing something, and because I'm not an accountant and there's other things in there, but I would have thought that the two numbers for 2023 would be the same, since note 8 is the tangible capital assets
It-
list.
So I didn't do note 10, but I will flag that and review.
Yeah, it's just and it's weird because of course then all the numbers, I mean, there's all the numbers below go to your total accumulated surplus, which I mean, the numbers all kind of out balance, I assume. Which is the other odd thing, which I've never understood, is that nonprofits don't really seem to have a balance sheet. And that things don't actually balance for a nonprofit. They seem to be stated kind of differently. Um, but anyway, yeah, that discrepancy kind of it just bothered me. I mean, it's not a huge
Yeah.
difference, but
Thank you.
okay.
Next year I'll get you to be my proofreader.
Well, that's the problem with being an engineer. Like, if this was actually in a spreadsheet for me, like Excel,
Yes.
I would just be like over the moon. But it would be really deadly.
Okay.
But we are supposed to approve these audited statements, so
No, they will get, what I imagine we'll end up doing is if there's issues to flag, we'll have them flagged and I'll get them corrected, and it's however the motion will be that it'll go forward to the board with these amendments.
Okay, do you want me then to raise it during the meeting? Or do you want to raise it during the meeting?
Is there a preference, Sally?
Well, I think we definitely need to capture it in the meeting, because we'll need to amend the motion to say, that this matter will be followed up upon, and as amended will be recommended to the board. So I think that I'll think on exactly how we want to word the recommendation from the FNA to the board. And yes, if you want to raise it, or maybe Stacy, when she's presenting, can just note you've
Right.
identified this discrepancy. The auditors are to be on the line here. I can't see if they've arrived yet.
Yes, Lori from KPMG has.
Oh, there you are. Okay, wonderful. Hi, Lori. I don't know if you just heard that bit of conversation, but we can deal with it when we get to that item.
All right, Stacy, so I'm going to let you raise it, or you and Lori or whoever during the presentation of the
Yep.
list. Okay. All right, so we're getting to 1 o'clock. Let's see who we have here. I haven't run one of these online for a while, so I might be a little rusty. So are we ready to call the meeting to order? Do we have a quorum yet, Sally?
You do have quorum.
All right, so let's call the meeting to order. And do you need a roll call?
I've just done a quick look here. No, we're good.
Okay, that's good. And there are a few people on this call that I don't know, and I don't know if we want to introduce them now or later.
Stacy, do you want to introduce the folks from KPMG?
Sure, I can't see who they are. Let me see.
Oh, up at the top, are you not able to scroll over? Or maybe I'll just ask the folks from KPMG
Yeah,
to
that
introduce
would be
yourselves.
great.
Sure.
I'm here,
Good afternoon.
Stacy. Chris Clark and Lori's here as well.
Okay, so nice to meet you too. And then there's one other name.
Dana.
Dana.
Dana is our financial assistant.
Okay.
Yes.
Okay, thank you. I didn't know her last name, so thank you for that.
Yes.
All right, anyway, welcome KPMG. We've spent so many years with, was it Cross Street? And now you've joined us, so that's great. All right, so call the meeting to order. We've done the roll call. I needed to know, are there any declarations of interest that you received, Sally, or does anyone want to declare any?
None were received.
All right, and no one is declaring any declarations of interest. So our very first motion is to adopt the agenda. So resolved that the agenda for the March 28, 2024 Finance and Administration Advisory Committee meeting be adopted as presented. So I need someone to move. So Jeff Atkinson moves and Roy Hoodle seconds. Any questions or comments on the agenda? All in favor? Looking for your hands. If I don't see a hand, that's okay. I'm going to assume unless you scream, then I'll assume that you're in agreement. All right, so the motion is carried. All right, next is the approval of the minutes from the Finance and Administration Advisory Committee meeting held on the 28th of November, 2023. So I'm going to read the resolution first. Resolved that the minutes of the Finance and Administration Advisory Committee held November 28, 2023 be received and approved as printed. So I need someone to move. I see Andrew, so moves. I need someone to second. Just looking, and Jeff Atkinson seconds. Are there any questions or comments on the minutes? Not hearing or seeing anything, then we'll go to a vote. All in favor of approving the minutes. So I see hands going up. Not hearing anything from Paul, so the motion is carried. So now we go to the crux of our meeting today, which is to review the financial statements from 2023, and then to look at the auditor's report in preparation for presenting these to the board in April's meeting, which is on the day of the eclipse, which we should talk about. But anyway, so the financial statements, over to you, Stacy.
Thank you. I'm going to try and get my screen sharing here. Not sure if, is that shared what properly?
Yep.
Okay.
Yes, it is. And
So-
I'm just gonna say, because I can't see everyone right now, that if you do have a question, if you can hold it to the end, that's fine, but if you can't, if you could use the raise hand, and I'll be looking for raise hands. Okay, thank you.
So I'm going to present the financial statements for last year. So we do have a new audit firm, KPMG, and part of the change was requiring that we prepared the statements, which I think I did to about 90%, and then with some assistance, and then we're also presenting the statements, as opposed to in the past, the auditor has presented the statements. So the overall structure is pretty much the same. We have the statement of financial position, statement of operations and accumulated surplus, the statement of changes in net financial assets, statement of cash flows, two schedules, one that outline the other revenue, and one that breaks down the expenses into our categories, and the notes to the financial statements. I'm going to be focusing on the statement of financial position, statement of operation, and the notes. Some highlights from the notes. If you have questions or want to look at other things, don't hesitate to bring that up or ask. On the statement of financial position, there's the three key areas: financial assets, which is our cash in the bank, our GICs, and our receivables. They're down about $322,000 from last year. Our financial liabilities, which is our payables, our deferred revenue, and our long-term debt, which is the bulk of it, is down $251,000 over last year. And our non-financial assets, which is our biggest element, is our capital assets, and a very small piece that's our prepaid expenses. The prepaid, just so people understand, is pretty much, it's a quarter of our annual insurance premium because of the timing of our policy. So it's fairly standard each year, coming in under 50K. And that's up about 418,000 over last year, leaving us with an accumulated surplus of just over 7 million. And that's our current year surplus of 347,853. The notes that I wanted to highlight from that statement we've increased our investments in GICs by 1.6 million, trying to take advantage of better interest rates that have been coming into play. The increase in the capital assets was primarily the CP dam safety measures we did last year, which was 305,000, and the start of our multi-year Kashwakamik Dam construction project, replacement project. Last year we worked on the Class EA, and that was just under 140K. Note 13 is our new element this year, which was the asset retirement obligation. We set up 61,936 as estimated costs for cleanup, potentially asbestos, possible lead paint at the buildings at the Mill of Kintail site. On the statement of operations, I redesigned the statement a little bit this year, splitting the capital activities from the operating activities. And then, so just noting that the operating surplus is about 189K, with 4.7 million in revenues, 4.5 in expenses. Our capital surplus was 158K, with 634,000 as capital revenues. That's the capital levy from last year. When we look at it for 2024, we'll be breaking a bit more out into the capital revenues. And then we had capital expenses, which is the amortization and the interest on the loans, of 476. So again, total annual surplus for 2023 was 347,853. Based on that, also from that is a status of the reserves. So from note 10 of the accumulated surplus, this is the end of year balances in the different reserves. So as we've noted, we set up 3 new reserve funds this year, the 2 category 2 and 3 operating reserves, and the new capital reserve for category 3 capital. New this year on the notes is note 12. It was a requirement, a new requirement with the current auditors, breaking down our expenses by object or type. We hadn't previously provided that. And just of note there, wages and benefits, which does include training and development, is about 63% of our expenses. Note 18 is a new note as well and explains the pension benefits related to OMERS, a status of the plan, and listing what MVCA contributed in 2023. That 191,000 is 50% MVCA and 50% staff. That's the total contributions for the year. And note 19 outlines some of the new accounting standards that were adopted and came into play for this fiscal year as required. Other than the ARO, which I previously explained, there wasn't any impact to MVCA from these new standards. Primarily, one of the key ones was on foreign exchange, and we don't have any foreign currency, etc. So that's kind of the highlights. I'm not sure if I'll stop sharing if anyone has any specific questions. Oh, to note, it was noted before we started the meeting, I just want to document in here, we'll need to amend. Note 8 has a net book value of the tangible capital assets of $7,893,010. Note 10, the accumulated surplus lists the tangible capital asset balance at the end of 2023 as 7,845,181. So there's a difference there we'll have to correct or deal with.
So Stacy, if I
Yep.
may, or Madam Chair, would I be able to just make a quick comment on that piece?
Yes.
So on your accumulated surplus note, so the investment in tangible capital assets, that amount is actually correct. What we can do is two things. We can make the change so that it ties to the previous note, but then we will have to add a new line to take out the ARO piece. The reason why it's different is because of the net book value of the ARO that was added to the asset.
Okay.
Because the ARO addition does not impact your investment because you haven't made any investment yet because it's sitting as a liability. So you can gross up the top number, add another line to deduct the ARO, or leave it as it currently stands. I'm good with either way, but I just wanted to put that out there as to the why. It won't change the numbers per se.
Okay, that actually makes me feel better because I was trying to follow tracking these from note to note, and that's what I had noticed, this discrepancy, but yet all the numbers seem to come out right. So there had to be some reason for that, right? So thank you for that explanation.
Do we want, I think personally that it's better if there's some way that it shows it's tied, because it obviously stood out that it was different. So probably amending the accumulated surplus to have that explanation of the ARO.
Yeah, I think if you just added a note somewhere, whatever works for you. So Sally, I see that your hand is up.
Yeah, I was just gonna say if we could add a text-based note into note 8 that says exactly what Lori just said. So I wouldn't fiddle with the spreadsheet. I would just make a note accompanying.
I would agree with that. If that doesn't change, that way you don't have to go and fiddle with spreadsheets.
Okay, that's great. So with that minor amendment, then I'm just wondering whether we need to, like, if we're all agreed, I can maybe just say financial statements as amended for the purpose of the motion that the group is going to be dealing with.
Yeah, it's really sort of an editorial as opposed to a substantial change, right? So
yeah.
Right. But okay, we can add that when I read the resolution. So are there any other questions on the presentation of our 2023 financial statements? For any Stacy or no, not seeing any. Not seeing any at all, but that's fine. All right, Sally, your hand is still up, so I'm gonna assume
Oh,
that.
pardon
that's-
me, my
Or-
apologies.
All right, so I'm going to read the resolution, which I'm gonna say would be just as amended. So resolved that the Finance and Administration Advisory Committee receive and recommend that the Board of Directors approve the 2023 audited financial statements as amended and direct that they be posted and distributed in accordance with Section 38 of the Conservation Authorities Act. I need someone to move. Maybe my vice chair there? Yeah, Roy, very good. Roy so moves. I need someone to second. I see Andrew Kendrick. No more questions and comments. All in favor then? See your hands. All sorts of hands coming up. And anyone opposed? No hands opposed. All right, so the motion is carried. So we'll be taking the minorly amended 2023 statements, and well done, Stacy and KPMG. Okay, so now we're moving on to the auditor's report. So over to KPMG or Stacy for that.
Okay, thank you very much, Madam Chair. Good afternoon, everyone. It's our pleasure to be here before you today as our first go with your first fiscal year under KPMG. We are sharing our screen here, which will highlight each of the pages that both Chris and I, we will tandem, do this presentation in tandem, and certainly as similar to the financial statement presentation. If you have any questions, please feel free to raise your hand between Chris and I. Certainly happy to answer your questions as they come, or certainly at the end of our presentation. So with that, we will start actually on page number 5, which is the status of the audit. The highlights is a nice slide to share with you all of the significant components of the presentation here today. So the first one is our status. So where we are today with respect to the audit is essentially complete, subject to having conversations with both yourself being the committee and ultimately the financial statements going forward to the board. So the board's acceptance and approval of the financial statements will then enable us to release our audit report in final. If you've taken a read through the deck included in this presentation, you will see that we have included our draft independent auditor's report as well that we'll touch upon in a minute. When we did issue this report in final last week to meet your mailing for today's meeting, the first bullet there was a specific item related to the audit, and that has now been received. So really we're in a holding position subject to the conversations with committee and ultimately board approval, which is great. So moving along in the next slide, we've tried to combine what we would normally include as part of an audit planning report as part of our audit findings, recognizing it's KPMG's first year as your external auditor, to give you a little bit of insight in terms of how we complete our audit. So what you'll see here is part of our risk assessment. So a KPMG audit is meant to be very much a risk-based audit. So what we mean by that is we stand back looking at the financial statements as a whole, and we do audit a number of conservation authorities across the province, which is also helpful. And we certainly make sure that we talk sector specific as we are making our risk assessments to make sure that there's nothing unique that should be required as part of any unique consideration. So we've done that this year in year 1, and we try to identify where we believe there's a greater risk of material misstatement occurring, and certainly adopting an audit plan and an audit approach to mitigate those risks. That's where you'll see all of those pieces there related to your specific financial statement captions. Layered onto each and every financial statement audit annually are presumed risks that are mandated to us by the profession that essentially says we need to presume certain risks, specifically around the risk of fraud, around the management override of controls and or revenue recognition. So certainly nothing unique to your organization at all. They are baked into every financial statement audit in Canada. So we've got here on the screen is a little bit of insight in terms of the first presumed risk, and it is related to fraud, so it's automatically deemed to be significant. And you'll see down there at the bottom of the page, all of the responses that we had to mitigate that risk, essentially looking at the culmination of the financial reporting process, specifically around the design and implementation of controls around journal entries, looking to make sure that there is segregation of duties, there's documentation of reviews and approval, and so on and so forth. Certainly nothing unique came out of the results of those procedures, and certainly nothing specific to bring to your attention in that regard. That will carry on. We actually need to do this work each and every year. So that will be something that will carry forward as well. Moving into some of the specific items that Stacy had articulated as part of the financial statement change, I would say lots of change for the Conservation Authority for 2023. Changing auditors is certainly a significant feat in and of itself, and then layered onto that are new accounting standards. So as you heard, asset retirement obligations was a new accounting standard that was required to be implemented. I won't go through a lot of this in detail, but certainly to say lots of conversations with the team to make sure that the standard was appropriately implemented. And so really what that meant is looking at the Conservation Authority's capital assets, making sure whereby there are requirements under certain legislation and or regulation to remedy those properties in the future. This new accounting standard gets those liabilities on the books. So I would say uniquely different perhaps here compared to other entities was management completed this internal assessment. It is an estimate internally. And so that will be something that will certainly set the stage and set the base for future years. And so certainly being mindful of any changes to any inputs, any changes in costs, any remediation activity, that will certainly be captured in the future along with the implementation this year. So it's certainly not a one and done, and the team will make sure they'll need to stay on top of this moving forward. The other piece that doesn't require near as much attention and effort you would have seen in the financial statements as Stacy articulated. There were new standards related to financial instruments, which were given consideration as well, and certainly nothing uniquely different this year. Moving along in terms of page number 11, you will see at the top, you'll see control deficiencies. So as part of our audit requirement under professional standards, to the extent we might identify any deficiencies in internal controls, a financial statement audit requires us to sit down with the team, understand all of the processes and activities, systems and controls that culminate into the financial reporting system. So that would include, your procurement, your revenue recognition, your payroll, HR processes, and so on, and banking. To make sure, to the extent we identify any significant deficiencies in internal controls, we need to be upfront and transparent and share those with yourselves, being those charged with governance. We have not identified any such significant deficiencies this year through the course of our audit, but as you will see on the subsequent pages, we have identified some other areas for improvement or best practice. So with that, I'll ask my senior manager, Chris, who's on the line, to jump in and speak to each of these briefly.
Thanks, Lori. Everyone can hear me okay here? So before I begin, I just wanted to give just a quick shout out to Stacy and her team on their contributions to the audit. Lori, being the engagement partner, is a little bit more high level and assists heavily on like the financial statement prep and stuff. But myself and Tatiana were more in the weeds and doing the actual audit work and testing in the file. And Stacy did a great job catering to our needs. I know that first year audits aren't necessarily easy, but I think we started off and got it done, and future years will definitely be more efficient. So thank you, Stacy, for that. In looking at these control deficiencies, essentially these are some observations we made during the audit. Again, like Lori stated, they're not significant deficiencies, but they're just little pinpoints that we want to bring to your attention and address moving forward. The first is evidence of review. Now, oftentimes, as Lori said, we rely on review controls to reduce the risk of management override, specifically when it comes to journal entries or manual journal entries to the general ledger, as well as monthly bank reconciliations, which are a big control for financial reporting. Now, in discussions with Stacy, it is our understanding that this review is happening on both these items, but in some cases, when we were looking at items, there wasn't necessarily evidence of the review. So we just want to flag that and make sure that when key items such as journal entries or bank reconciliations are being done, that there is evidence of review and sign off, as well as timely sign off, so dated when you can. As we move into a more digital era, using electronic sign offs or system generated sign offs can be handy. In terms of vacation and time in lieu accruals, so during the audit, we did identify in one of our samples that essentially the amount accrued for vacation as per the payroll software didn't agree directly with the amount recorded in the general ledger. again, an immaterial amount, so it didn't have a material effect on the financial statements, and it was below our posting threshold, so we didn't formally adjust for it. But again, you know, we flagged this because obviously you want your subsystems, such as your payroll system, to agree with the general ledger as accurately as possible, as you do rely on those for financial reporting. And then secondly on this one was that bank time is being tracked by management, which is great. Until this year, it hadn't necessarily been quantified and adjusted in the financial statements. That was quantified by Stacy, and we did make an adjustment for that this year. So again, we continue to recommend moving forward, obviously continue tracking these balances and on a timely basis, do a reconciliation between the general ledger and the subsystem or tracking mechanism you use. In regards to tangible capital assets, the first point we wanted to bring to your attention is that deemed dispositions aren't being recorded in the general ledger. What this means is when an asset is fully amortized, its net book value is zero. So it has a net zero impact on the financial statements on the balance sheet or a statement of financial position that we reviewed today. However, in the notes to the financial statement or on a gross basis, these assets are still included in the total cost and total amortization balance. Our recommendation is annually you review assets that are fully amortized and write these assets off the schedule, just so that your gross balances are clean and tracking appropriately. Secondly, in regards to TCA, there were a handful of items when we were looking at additions or purchases during the year that were slightly below the capitalization threshold set out in the TCA policy. Again, we reviewed these items and they were capital in nature. That being said, you know, when these policies are set, obviously you want to do your best to abide by the thresholds that are set. It streamlines things from a management and accounting perspective, and as well keeps things objective, and doesn't let you, I guess, play around with your surplus as much if you are recognizing things as assets or expenses when they're not within those thresholds. So we'll continue to monitor this in future years, and hopefully we can get things cleaned up and more streamlined down the road. Now the last one here, I noticed when I was going through the presentation just before, that this should say right here, it should say developer deposit tracking. However, clearly this was copied and I didn't correct it, so I'll take blame for that. But this point really revolves around developer deposits, which essentially sit on the books in the deferred revenue line item on the statement of financial position. Essentially, the Conservation Authority takes deposits from developers and they're either retained or reimbursed when the developer satisfies whatever requirements. We had noticed that, financially, this number was right that's sitting on the books. However, there's not a formal process in place for tracking, I guess, the reimbursement of these deposits or when they can be written off and recognized into income or expense. So I did speak with Stacy about this, and it sounds like this is kind of on the docket for 2024 to address this more formally. Again, not a significant deficiency or anything that could materially affect the financial statements, but again, a pointer we wanted to point out and address in this report. Moving along, Lori kind of already touched upon the asset retirement standard that came into effect, as well as the financial instruments standards. So I won't touch upon that really anymore. In terms of other financial statement reporting matters, obviously, as Stacy mentioned, she put together the draft financial statements. She did a great job, got it most of the way there, but we obviously got involved and assisted with some additional disclosures and adjustments related to the new accounting standards. Other than that, no other matters to report here. In terms of specific topics, no matters really to report for these items. You'll see here on the left. The only matter we did discuss with Stacy was just in terms of balances receivable from the Conservation Foundation. There were a couple that were a little bit older in age. So when pledges are made or when donations are committed to, you'll want to, focus on collecting these balances on a more timely basis, just to keep that receivable clean and aged appropriately. In terms of independence, obviously, as part of our accounting standards and audit standards, we need to assess our independence each year. This year being a first-year audit with KPMG for the Conservation Authority. As part of our Know Your Client onboarding process, we assessed our independence. However, moving forward, we'll assess this each year to make sure that we remain objective and independent of the organization, so we can issue an audit opinion without any issues there. And then moving on, there's just a few appendices attached to this. I won't spend much time on them. However, in terms of, there's lots of useful links in them. You as members of the committee can take a look around these links that are included throughout. The main thing I did want to bring to your attention, and it was attached on the front of the statements that Stacy presented, was our independent auditors report for this year. Good news, first year audit, clean opinion. So no issues in that regard. The only item that is unique to this year's auditor's report is this other matter in regards to comparative information. Now, this is required by our standards because we weren't the auditors for the prior year comparative numbers. However, in future audits, as we move on, this will be taken out as our numbers will be the audited numbers and the prior year comparative balances. But other than that, nothing else to note in the auditor's report. Clean opinion, no issues there. The next piece in terms of appendices is just our management representation letter, which you'll notice it's dated April 8th. That's ultimately when the statements will be approved by the board. And this is essentially a letter that Stacy and Sally will sign off on. It's their representations that they basically done their part in terms of the audit. Nothing that they're aware of that would materially affect the financial statements or subsequent events to be disclosed. So this will be signed off once the board approves the financial statements. An appendice to the appendice is just a summary of our corrected misstatements for this year. There was 3. The first one I would say is almost a bit of a tandem effort between us and Stacy. You know, we made her aware that there was an adjustment to be made in regards to the new ARO standard, but she worked independently with the management team to determine this estimate for the building ARO. The second adjustment was just an adjustment to record the retirement benefit liability that sits on the balance sheet of the Conservation Authority. This adjustment is made each year based on the actuary's roll forward report, which is done, and a full benefit liability review is done, I believe, every 3 years. So next year will be the final year where we can rely on the current report that Mundellis has prepared for us for the audit. And lastly, I already mentioned it earlier, but this is just an adjustment to record the bank time and lieu balance in the financials of the Conservation Authority for this year. Again, like I said, a couple of these appendices are more a little bit about of how we deliver audit quality and our standardized approach to audits. The only other piece through these appendices that I did want to briefly touch upon was some of these audit quality indicators. Obviously, in terms of audit team composition and knowledge, technology, independence, and the involvement of board and members of the committee, there's no concerns. The only thing you'll see here is specific matter to report. This red icon here was just obviously it being a first year audit. It was a first year that Stacy was preparing the financial statements. So there was some slight delays in the delivery of information, which is why it was a little bit delayed on completing the audit and the financial statements. Again, you know, I think as a committee, take this as a grain of salt for the first year. It is the first year we're working through the kinks, working together. But ultimately we came out and we were able to successfully complete the audit and the financial statements. So no real issues there, but I did just want to flag that for your attention. And yeah, other than that, I think these appendices, you know, when you have time, a lot of these links are live links to some of insights into being on a finance committee and other useful facts that and information that KPMG provides. So that's it in terms of our report, and I open the floor to any questions that anyone has for myself and Lori.
We could stop sharing the screen so I can see everybody. See if there's any questions from anyone at all. Looking at, because I have a question, and this is sort of a generic question with respect to nonprofits. And it's really, I'm used to seeing balance sheets, right? And instead it's a statement of financial position. And I'm used to seeing a balance sheet, everything kind of balances, right? Where you have your assets and your liabilities and then your retained equity and all this sort of stuff. So how is it different for a nonprofit? Because when I'm looking at the statement of financial position, it's a bunch of different numbers that aren't all the same. I don't see a balance sheet. What does it mean?
So I'm not sure if that's directed to myself. I'm happy to take.
Whoever.
Okay. I don't know, Stacy, did you want to have the first cut?
More just audit statements aren't necessarily your standard statements that we use. So, I mean, we could certainly still provide as internal statements, the balance sheet and stuff, but the audit statements are different and as
Okay.
required. So,
Okay. Because this has always perplexed me. So I've just never understood. All
So,
right.
so maybe
Sorry.
I'll just chime in to say, unfortunately, not-for-profits report under a different type of generally accepted accounting principles, a different financial reporting framework. This framework is unique to government, and you are considered to be a government organization, which does get you to the same spot, but you don't necessarily see your assets and your liabilities and your equity matching. They do the same way, they just don't make it as nice and clear and concise as the other financial reporting frameworks. It's still a balance sheet, just presented in a different way. But this is unfortunately what is required by the financial reporting framework.
Okay, thank you. I assumed it was probably something like that.
Yeah.
All right, Andrew.
Yeah, thanks. The risks, I was slightly surprised that there isn't anything in there regarding non-directly financial items like climate change, because climate change is to my mind, a significant risk for things like the ARO. Is that something that KPMG is seeing in other audits for similar bodies, or again, is this something that for this particular function you just leave to the side?
So that's a great question through you, Madam Chair. Let me take a first stab at it, and I'll see if we're landing in the same spot. So I would say climate risk is definitely a business risk. Many other entities are very much thinking about that and actually being required to give consideration to that in their financial statements and have reporting. The financial reporting framework upon which you currently report under is not there yet. I'd say it's significantly behind. New standards were just announced, I'm going to say, in the last month. So I would say it's a business risk, not necessarily a financial statement risk related to the audit of the financial reporting. I think that's today. I think it is going to change significantly in the near term, likely in the next few years, but that certainly is the case here today. And I think this sector will likely follow suit with where some of the other sectors are ahead of the curve as required by professional standards. Similarly to where other countries have come as well.
Okay, thank you.
Right. Good question, Andrew. Any other questions? All right, that's the auditor's report, and I'm just checking to see, no, we don't have a motion for that. No motion, very good. All right, well, thank you, KPMG, for your really new fresh set of eyes in the middle of actually some changes in accounting standards. That must have been really challenging. And thank you, Stacy, for all of your hard work in supporting that. And we'll look forward to seeing you at the board meeting in a couple of weeks.
Sounds great. It was our pleasure. Take care. Have a nice
Awesome.
day.
Thanks, everyone. Have a great
Bye-bye.
weekend.
Thank you. Okay, so we'll move on to the next agenda item, which is the employee manual amendments. And I believe Sally is going to start that.
Yes, so as noted in the report there, our employee manual had some conflicting language in it that made it very unclear and confusing to administer, particularly the combination standby pay and on-call. And then it was entirely silent on our duty officer, which is something we've used as an organization for years, but it was never properly captured in the employee manual on how this person would be compensated. So the objective of this report is basically to clarify the language around the on-call, how we do that, and to properly capture current practice as it relates to the duty officer. So pardon me. So attachment 1 shows you exactly what we're deleting. We're deleting the standby in its entirety because it was having this duplication of very similar terms that was fundamentally one of the key challenges. And then clarifying some of the language on the on-call. We're also proposing to up the pay because it hadn't changed at all in at least 5 or 6 years. And then clarifying about how pay would be earned, whether it's a time off in lieu or actual cash compensation. So historically, it's all been time off in lieu, but we felt that if it's a statutory holiday, that really, you know, it truly is a major encumbrance to people. People make plans around long weekends, and therefore they should really be compensated in cash for going on call and potentially compromising family plans, etc., around statutory holidays and the like. So that's the change as it relates to the on-call, and then the new language with respect to the duty officer. So at various times of the year, in particular, historically this time of year, but we're experiencing a very different spring this year. But at this time of year, I mean, this role of the duty officer, it is absolutely critical that we are monitoring the system every single day of the week. And so and because of the greater irregularity we have been seeing in the system, whereas it used to be purely seasonal, we're monitoring it much more carefully. So this is becoming almost a 365-day-a-year kind of activity. And but typically the task required is really just opening up our online system that's monitoring 24/7 the watershed. It's reviewing water levels to identify if there's any areas of issue, checking the various weather forecasts that we have, doing the analysis and determining whether an after hours log operation is required or if it can be delayed till, you know, the Monday or whatever the case may be. So this puts in place that person will get paid for that base hour, but then if they actually have to, you know, liaise with crews and call orders, that subject to the Employment Standards Act, they're entitled to base 3 hours pay. So we're just trying to make sure that we have a policy in place that is fair to the employee and fair to the organization and upholds the requirements of the Employment Standards Act. So I feel very comfortable with the new language and the approach taken to both these terms to recommend it to you. I'm happy to answer any questions you may have.
Sally, I have a question while we're waiting to see if anyone else does. I wondered whether actually putting the rate in, that is the $25 per shift, should go in the employee manual, or whether it should be somehow separated out such that it changes yearly along with pay increases.
Yeah, I sort of wondered that myself, truthfully, and we could, I guess, add it to the it's not the, it's our, well, we have our wage bands, but this isn't exactly a wage band per se, but we could add it to that table. I don't know if Stacy wants to have any further comment on that.
Just more, I don't know if you want to, I'm not sure you want to necessarily increase it every year. It's that's kind of why I think it's been in there before. It's static for a period of time. I don't have any issue, and maybe it's that it allows us without having to come back and change the policy, that it's a not more of an operational thing. And it wouldn't be more than potentially COLA, but
Yeah, if I could just add comment to that, that when we checked around with other CAs, this is in line with them, but there is a history amongst CAs of not changing them very frequently. So, which isn't necessarily a good thing, because I think people should be properly compensated. So, I mean, I would be happy to amend it to move this into the wage schedule, that it goes up by a fixed amount every year, and then, you know, we're sure that we're being fair to the employees in that position.
Yeah, before we get to Andrew, how would other board members or committee members feel about that change?
I'd agree with it. I think that simplifies things rather than having to go through a much more formal process every time. So whether it be in the salaries or whether it be linked in with things like mileage allowances, take. So I'd certainly support Janet's position on that.
can I interject? One
Certainly.
point, Sally?
Yeah, and I think Allison had a question on it or comment on it. So go ahead, Stacy.
The $25 that we have there is approximately 1 hour, give or take a little bit, of pay. So that may be an option for that position. It may be an option to make that change. That saying it's the equivalent of 1 hour. And just a thought on that.
All right, I think Allison had a comment first, and then I saw Jeff having a comment. And Andrew, I'm going to assume your hand is up for a different comment, and we'll come back.
Yes.
Okay, so Allison next, please.
Thank you, Janet, Chair, through you. So I have to agree with Janet that I think instead of falling behind, we can be leaders in this and tie it to something that it does change based on COLA, similar to wages. I think it's easier to stay on top of it than fall behind and try and do that adjustment in a bigger adjustment. So I would agree with placing it into a policy where we can look at it on an annual basis, and it be tied kind of to COLA with staff's wages.
All right, and then Jeff. Oh, you're muted, Jeff.
How's that?
Good.
Okay. I think Stacy's suggestion might actually work for us, because when they're actually called in and they work, it's based on their salary. It's lieu time or it's time and a half, but changing that $25 so it's the equivalent to 1 hour of pay means we don't have to put things in the tables. It's in the employee manual, and it automatically floats. So that might be the simplest way of accomplishing it.
Yes, Sally.
I like that idea in particular because under the duty officer, we say 1 hour pay, so it would be consistent between the two. I like that idea.
All right, so I'm thinking everyone seems to be supportive, so if you would like to make those changes to be consistent so that things are referenced in terms of hours of pay, then it becomes automatic, and then we'll make the resolution as amended. All right, so moving on then to Andrew.
Yes, just a quick question, Sally and Stacy. Do you have a feel for how much this is going to cost in cash terms in the budget going forward?
Not in terms of the switch to paying for the stat holiday. It's not that common that people actually are getting called to work on the days. I see the on-call happening a lot more, and that is already in play. We're paying that now, so that wouldn't be a change. But it's not very frequent that people are actually called in on a stat holiday to work.
Yes, Sally.
The only thing I would add to that is typically if an operation is happening on the weekend, it's being done at the behest of OPG, and we build them. So.
Well, let's raise it more.
I want to
Put
go
that
off
in the
the grid
minutes.
before
No,
that.
no.
Charge a billing fee.
That's right.
Yeah. So, yeah, we try as best as possible to minimize our own log operations so that people get to enjoy their weekend.
All right, very good. Are there any more questions or comments on the changes to the employee manual? All right, not seeing any. I'm going to read it as amended. So resolved that the Finance and Administration Committee recommend that the Board of Directors approve amendment of the employee manual as amended and set out in report 3406-/24. I need someone to move. Jeff so moves. Allison seconds. No more comments or questions? All in favor? Looking for the hands. Motion is carried. All right. It's going along tickety-boo here. So our last item on the agenda is removing operational and redundant items from the MBCA employment manual. So over to you, Sally.
Right. So you'll see on page 1 of the report a list of all these things, and you can see they're all largely procedures or forms or other form of agreement. And these don't belong in a policy document. These things can change over time. Some of them are long out of date and have been replaced by other documents and the like. So this is really truly just a cleanup thing that is arising from the report that we tabled last year that said that we wanted to go through this process and disentangle operational matters from truly board policy type matters. And so this is one of the many reports that will probably come forward in the coming months to just as we identify these things and are able to address them and clean them up. So these ones, I don't know if you've had the chance to go through, but if you went through the appendices, I've attached all the sections that would come out. Most of the duplication is that these things are spelled out in our health and safety manual and our code of conduct and these other documents. So they truly are either duplication or redundant in terms of the other ones in our health and safety manual take precedence. So if anybody has any further questions or wanted to review any of them in particular, happy to do so.
So I would assume that the employees have equal access to the health and safety manual and other things as they would to the employee manual. So they're not losing access in any way, right?
Correct. Yeah, and it's the health and safety manual that they receive training on.
Ah, okay, good. Thank you. Okay, I'm not seeing any comments or questions. Not seeing anything. So I'll read the resolution. Resolved that the Finance and Administration Advisory Committee recommend that the Board of Directors approve removal of various redundant or conflicting policies and operational elements from the employee manual as set out in report 3407/24. I need someone to move. Paul Kehoe raising his hand, I think from his car, and seconded by Roy Udall. Any more comments or questions? All right, all in favor? Looking for all the hands. All right, motion is carried. Very good. All right, is there any other business, Sally?
No, I just, since everybody's on the line, I'll let you know that we're going to have First Nation opening to our AGM in a couple of weeks. We're having somebody come and doing a ceremonial opening for our AGM, so that'll be a first. So looking forward to that. And we're also going to be planning a bit of a lunch for our AGM as well. So hoping everybody can attend on site that day.
The issue, of course, it is Eclipse Day. So I'm actually wondering whether personally, I'd rather be at home looking at the eclipse. So, or not driving out there because it's actually going to be peaking right probably close to the peak of our meeting.
If you can make it down to Portland for about 20 after 3, so if we finish on time and you hit the gas, I think Portland's in the zone of totality, so you might have a shot. If we finish a bit early, you can get to Portland.
Yeah, but still, I think, it says still 98%. I am actually concerned because, I don't want to be driving home, from a meeting at the peak of the eclipse. It's going to be pretty dark. I've actually been in a total eclipse before, way back when, and it's going to be like close to night. Okay. And it's going to look weird. And, so it is something that kind of concerned me, Sally, is that we have this meeting kind of right happening when this eclipse is occurring, when frankly, I think a lot of people, myself included, would really like be looking outside, So, I don't know.
Echo the above. I think there's going to be a lot of distracted drivers around, and
Yeah, that too.
Okay, well, how about leave it with me then, and Kelly and I can maybe do a bit of a doodle poll and see if there's an alternative time on that day or a different day of that week, and we'll try to make it work then.
Yeah, I know it's kind of late, but I just remember looking at the 8th going, oh my God, it's a board meeting. Like I just looked at it on Sunday, and even if I know earlier in the day, sometimes that conflicts with some of the City of Ottawa committee meetings, but even if it were earlier, and it went, and then we had a lunch instead, and we all got to drive home, before 1 o'clock.
Okay,
So I think, like, I personally, Monday in the morning is usually pretty open, so maybe the same is true of
Yeah.
some of the other.
can we
Yeah.
just do an informal poll right here? Like, is there anybody on the line right now who wouldn't be able to come in the morning on that same day? Okay, well, that's a good indicator. Like if everybody on the call here today could come, then that's good to know. So, all right, that's what I'll propose then, is I'll propose that morning, and if we get quorum, that's the main thing. Like as long as we can get quorum.
And the auditors can still come.
Yes.
And our First Nation person.
First Nations, yeah, I know. Yeah. Yeah, I know.
Okay.
All right.
and I'll just note that as of today, it's showing sun and part cloud on the 8th, so it's not supposed to rain all day.
Yeah, I could do that then. Yeah. All right.
Okay.
All right. Thank you, Sally. So I'm glad we dealt with that. So if there's nothing else, I will read the resolve that the Finance and Administration Advisory Committee meeting be adjourned. So I need someone to move. So Roy Hoodle moves. Paul Kehoe in his car seconds. All in favor? All right. We are so adjourned. Thank you.
Thank you, everybody.
Happy Easter.
Bye.
Happy
Have a
Easter.
great long
everyone.
weekend.
Eat too much chocolate.
Bye-bye.
Thank you, Stacy, for the
Oh.
financial stuff.
Eat
Thank
that
you.
chocolate while it's cheap.
Yeah, get it while it's good. Yeah, exactly.
Yeah. Take
Thank you.
care all.
All
Bye-bye.
right, bye.